Welcome back to The Build Up, presented by Brown Harris Stevens, where we discuss the secrets of building wealth through real estate.
Today we're joined by Aleksey Chernobelskiy, a former institutional investor who once managed a $10 billion real estate portfolio, and now he's the founder of Centrio Capital, which is a platform that's connecting general partners with over 1,700 verified limited partners. Aleksey shares how he immigrated from Moscow at the age of 11, and he's building a career in finance, ultimately led him to uncover the massive opportunity in real estate syndications. In this episode, he breaks down the mechanics of smarter passive investing and how he's helping everyday investors access the kind of insights once reserved for only Wall Street investors. So let's talk a little bit today about how developers are changing their approach to building due to a change in buyer demands, right? So gone are these days where, just really flashy finishes and a huge amenity package would really make and motivate a buyer to make a decision. They're coming in now with spreadsheets. They've done their homework. They've probably looked all over that particular area, and they're looking for, a very different, they're looking to fill a very different need right now.
I think after COVID, we've seen a really big shift, but we've continued to see that shift. That's now become the new norm. So, when we're working with buyers and even sellers as well, we're seeing buyers, they're coming back 3-4 times before they make their decisions. They're looking at different things such as layout. Is this adaptable to the way we're living right now, like our new way of life? They're coming back at rush hour to see what that traffic is like, right? And now they're also looking at, hey, I saw it in the morning. I want to come back in the afternoon and sometime even after sunset. They do want to see it multiple times. So we've been seeing that really shift as well.
Yes. And I think a big part of the shift happened after the pandemic and COVID. So pre-pandemic, we saw a lot more of cookie cutter floor plans, very uniform layout.
Yeah, I remember we saw like an example directly when we saw a developer was like, hey, we planned for these sort of floor plans with a 2-bedroom layout to really maximize the space. But given that buyers have this kind of different demand now, he actually went back to the drawing board and was like, look, let's make this a large 1-bedroom with a home office, because we've seen that shift where a lot of buyers are working from home. So that's sort of the demand. And we've been seeing this again, like multiple times, different scenarios.
So yeah, again, we're really seeing buyers focusing on functionality and sustainability and just a really clean quality design.
Right. And I think the new luxury is now, is this supporting the way I'm living or I want to live? And again, we're seeing that buyers are coming in saying, hey, is the kitchen too small for what we want? And they're not settling at all. And, it's a big problem here, especially in New York City, because there's limited inventory. But now is an opportunity because we're seeing a new wave of inventory coming and new inventory plans. So this is really good feedback for the developers. Right now they're having more of this sort of intentionality versus before it was all about like, hey, let's make the brochure as glossy as possible, trying to attract in terms of marketing. But now they're actually looking at the quality of what they're putting out there, and is it really aligning with what buyers want?
Yes, and you mentioned before, buyers are obviously looking to make sure that these homes are really filling their lifestyle needs, which right now have been a lot more focused on wellness and health. And so we're seeing developers putting in things like circadian lighting, cold plunge pools, infrared saunas, and these used to be just nice to haves, but we're now seeing them move in a trend of more deal makers.
Exactly. And we talked about this before, I think, in a previous podcast, but now we're actually seeing them plan for it. Before it was like, hey, this is the demand. A lot of the new buildings, they don't really have it yet, but there's been a gradual shift. But now we're seeing, again, with the new wave of inventory, these are the kind of things that, developers and builders are really looking for, especially if they're demanding over $2,000 a square foot. People are like, hey, I'm willing to pay it, but I want to make sure that it's going to really align with how I want to live.
Yeah, the bottom line is that buyers are done settling, which is a good thing because it's really forcing developers to be innovative, to respond to their needs, and to ultimately build better housing.
Like we've said previously, it's a really good opportunity for the developers and the ones who are actually listening and getting feedback, and especially from brokers and, even buyers who have their feet on the ground. It's a really good opportunities for these builders and developers to have a sit down and understand what are people really looking for. for. And, for those developers, they're going to do really well versus the ones who just want to keep on doing the same thing they've been doing for years and have sort of like that ego, right? But again, let's see how this really affects, because we're seeing it firsthand. We're talking to developers. We're giving them feedback as well. So it'd be interesting to see how this plays out.
100%.
This beautiful set here at Studio 1873 is brought to you by the Everset. The Everset provides full-service staging and furniture rental solutions in the New York area. We work with Brown Harris Stevens and many other top real estate firms, staging their homes to sell quickly and at the highest price possible. Our staging is affordable without sacrificing quality or design. For more information, please visit us at staging.theeverset.com or email us at staging@theeverset.com to request a free proposal.
When we first started Excel Real Property Management 11 years ago, we did so with the intention of protecting the investment community. Here at Excel Real Property Management, we focus specifically on serving the needs of individual apartments, townhouse, and small multifamily building owners both in Manhattan and select neighborhoods of Brooklyn. Our services encompass everything: rent collection, expense payment, handling maintenance and repair, turnover between tenants, insurance needs. Literally anything that an investor would typically handle him or herself, we take care of for them. Whether you hold one individual apartment or a rental building that houses 20 units, Excel is here to help with all of your specific needs.
Okay, so today we're very excited to have you with us. Aleksey, welcome to the Build Up.
Thank you so much for having me.
Of course, and we're happy to talk to you today about your evolution from Moscow to the US and Main Street. So we know you immigrated here into the US at 11. So talk to us about how that experience shaped your perspective and drive in the world of real estate investment.
I think it just teaches you not to give up. I mean, I came to the US when I was 11 with no English. Learned a lot from my parents. And now as an entrepreneur, I think I give up a lot less frequently, let's say. So I think that's just by far the biggest thing. And I'm not really sure that it's specific to real estate, but in investments in general, you need to look at a lot of stuff to find something that's really good.
Yes. No, we agree completely. Melissa's an immigrant herself. I'm from an immigrant family too. So we definitely agree that tenacity and that drive is something unique to those who have had to struggle, to kind of get to where they are. So we really appreciate that. And as you well know, investing is not for the faint of heart. And so you definitely need to, have something within you to really motivate you to get to that end goal. And, your track record is so impressive. After you came to this country, you eventually were able to begin working at Store Capital, which manages a $10 billion real estate portfolio. But obviously that trajectory wasn't linear. So how did you go from, just coming to this country as a young boy to ultimately getting into real estate?
So I came and I went to college. Eventually, funny enough, I'll just mention this quickly, but I realized in college that, in America, at least, this is not how it works in Russia, but in America, relationships matter a lot more than grades. So I sort of witnessed a lot of my friends who were, let's say, intellectually not as smart, but emotionally and sort of like networking wise, far smarter than I was, get sort of the best jobs. And I was like, wait, I thought that's not how it works. Like I got 4 majors and I got like such a good GPA. What happened to me? Like, what about me, guys? And so, sort of like the hard way, I realized that, America is different. And that sort of led me on to a whole, discovery over sort of like 10 years where I worked at different places, on the buy side, specifically in non-real estate investing. And then when I got married, I moved to Arizona. It happens to be here that the majority of the investments in Phoenix, in terms of like the infrastructure of the firms, are real estate related. And so, I slowly looked into real estate, found a place that was a nice mix of like credit and real estate investing, which is pretty unique to real estate. So my background was a really good fit. Had a really nice run there, and then obviously around 3 years ago, I left to start something on my own.
Yeah. And like you said, it's very important to have that sort of community and, just really quality people around you, because for us, we're in real estate. So we understand that completely in terms of networking and just building, like I said, that community of people who are supportive to you. Right. So totally understand that. And you just touched on it. You founded Centrio Capital, which has been the go-to platform to connect general partners to limited partners. So what do you say that really inspired you to want to create that and move away from, what you were doing before?
I guess like almost in an unrealistic sense of self and what's possible, to be on your own. I mean, I sort of had the itch for a while to do something on my own. I definitely did not understand how difficult it would be, and perhaps believed in myself a little too much, but maybe that's what's needed. It's as far as what I'm doing now, I think you can basically break it up into two parts. I advise LPs, so essentially people who are not from the real estate world, who are investing in real estate passively. And also through that, I was inspired to start GPLP Match, which you mentioned, which is a way for GPs to meet LPs for free, actually. Everyone asks me, what's the catch? And like, there actually isn't one. The reason why I started is I basically, on any given day, I would speak to an LP who sold a business and they have like 10 million liquid, and they would say something along the lines of like, well, I want to invest some of it in real estate. Who should I speak to? And they're like, well, what are your parameters? And of course, like they would go off like, well, it has to be multifamily. It has to be in, whatever, New York. It has to be so-and-so like experienced track record and this and that. And I'm like, whoa, like, I don't know. Like I know a lot of GPs, but like, I don't know that many. Like I can't think of someone off the top of my head. I'll let you know if I think of someone. Then I get off the call and I get a call from a GP that's like, hey, like I'm a New York multifamily guy with a 10-year track record and I'm raising money and I just can't find anyone. Do you know any LPs? And I'm like, well, it's so funny. Like, I actually do. And so one way to attack that problem is, I guess, the conventional route of being like a broker dealer, an equity broker. And I try to attack it from like a more tech perspective. And so I built a platform where GPs submit deals within like a few minutes, and those deals get sent to over 1,000 LPs usually, depending on the match. And the LPs reach out depending on, if they like it or not, invest. And again, as I said, it's free of charge to both sides.
That's an amazing platform. And it's interesting that you took the more tech route versus the broker route. We're real estate agents in New York. And so that probably would have been our default, would to go that way, try to structure those deals. But it's really interesting that you made it more of a platform where these deals are democratized, the access to them, and obviously it's free of charge. And so that's an amazing, angle to take to this very needed resource, which is pairing these GPs and LPs together so that these deals can happen. But we imagine that you must have faced some challenges going from the institutional side of investing to now working and advising these individuals, who are looking to place capital. So what were some of those challenges and the learning curve as you made this transition?
How much time do you have? I mean, I think the biggest one is just the sophistication levels in terms of investments are like polar opposites. So I came from the REIT world. We had like a $2 billion revolver, guys. Like at any point, anyone wanted us to buy something, we would buy it in all cash with 30 days, with waived diligence in some cases, the types of people you deal with in that world are extremely sophisticated. You're speaking the same language. Once you go over to the world of LPs, what's interesting is I've met literally hundreds of extremely smart and wealthy people. But when it comes to investments themselves, they just don't know much. They might have built a massive business, sold it for 100 million, but they can't tell you what a cap rate is, right? And yet they want to invest some of their income into real estate, and they just they're just here to learn. And so that has been like a very big shift. You sort of have to speak their language as opposed to the common language, and explain things and have patience, and understand that some things that might be obvious to us are not obvious to everyone.
Exactly. And, you're talking about something that we've learned as well. Education is really important, and it's really the key to real estate. And, it's the whole purpose of this podcast, right? So throughout your journey, what has been some of the key lessons that have shaped your approach to investing and advising others?
I think probably the biggest experience that helped was being at STORE, which is that REIT. I didn't really realize this until I left, but I ran a 20-person team. On any given week, we probably looked at, I don't know, like somewhere between 10 and 20 deals. And those are after the sales team has already vetted, maybe 2 or 3 times more. And so when you look at that much deal flow, you start realizing like, well, there's a lot of deals out there. And ultimately, the art of investing is understanding through reps. That's literally the only way to understand it is through reps. You start understanding that like, well, this isn't normal. This is strange. This feels off. Like you start sort of developing these gut feelings based on looking at a deck for, I don't know, in some cases 10 seconds, right? And there's just no alternative to reps, I think, in that world. And a lot of LPs want to think that it's like, you just invest and it's real estate and it's safe. And that's just, I usually tell them like, I'm sorry, but like, that's just not the case. And like, if that's the approach you want to take, I would probably tell you to not take it. Just stick it into an index fund and keep working and do other things. And that's okay. It's just, you have to know what's right for you.
For sure. And we agree completely that there's really no substitute for experience and those reps like you mentioned. But given all of the reps that you've done, and for those who are maybe just getting started, what are some of the things that you recommend to LPs when they're trying to assess the credibility and the track record of a GP?
I think the first thing is just understanding what they have done and digging into that. Because I can tell you, I don't know, probably a third of decks in like the lower middle market space, which is sort of where I live most days, typical syndications, right? Probably a third of those decks are either they're like on the spectrum of deceiving to lying in terms of their track record. In other words, they'll tell you that they have done X, but they didn't actually do X. They were just like, an LP in X, for example. And that's like not the same thing as running your own deal, right? And maybe they were a GP, but they were actually a co-GP and they were not the controlling GP and they weren't making the actual decisions, So like there's so many iterations here of what are what I would call like sort of soft lies, or white lies, I think they're called. The first thing is just like make sure you understand what you're looking at. And don't trust people. I always tell people, when it comes to family, you can trust them. But when it comes to people you don't know, I always tell people a much better approach is verify and then trust slowly, as opposed to trust but verify. It's a much healthier way to think about it.
Right. And so what do you think that they should be considering before they invest?
Broadly speaking, I speak about 3 pillars. The last of those 3 pillars, and to many people, they find this surprising, the least important, in my opinion, the last one you get to is the property itself. The first one is who you're investing in, the person, their track record, their ability to execute. And by the way, to be clear, just because someone doesn't have a track record doesn't mean you shouldn't invest. It just means that they have a higher risk of executing properly, right? And you have to consider that along with all the other facts, and maybe you're still interested, which is fine. The second pillar is alignment of interests. In other words, like how are the alignment of interests between you, the LP, and the GP at the start of the deal, and how will that look like throughout the transaction?
Yeah. Definitely. There's so much to consider. And again, this is just kind of like the surface of what to be thinking about and how to assess proper investments. But let's get a little bit more into it as well. So can you explain a little bit the importance of understanding how these deals are structured? For example, how preferred returns work or return of capital clauses, like a little bit of the deal point side of it. What should investors be aware of?
Yeah, sure. So, let's start with return of capital. And Pref, to your point, this is all like alignment of interests. So, in a typical syndication, I would say 90 to 95% of the capital comes from an LP. And because you as an LP, let's assume that you're just a single LP in a deal. Because you are putting up all the capital, your capital is at risk. That means necessarily that you should get your capital back first before the GP starts profiting. Now, of course, the GP still needs to make a living. They need to be incentivized. So that's why there's like management fees typically. There's also promote to the extent that the returns end up being really good. But if the returns are not so good, the return of capital clause is what protects the LP. In other words, let's say you invest $1 million, they sell the property and there's only 800 remaining. So you can't split that 800 50-50 or 80-20 or whatever. Like that entire amount needs to go to the LP first. Once the return of capital happens, there's something called a pref, which is, again, it's a way to align the interests to at least make some basic level of return. Typically it's like within 7 to 8% nowadays. And that just accrues if it's not paid in cash throughout the life of a deal. While we're on the topic, I'll just mention, just because something is accrued does not mean it'll ever get paid. So people should not get it confused with a guaranteed return. And GPs should not represent it as a guaranteed return. I see that all the time too. And then obviously beyond the pref, there's typically a split where that's where like the GP starts profiting from their excellent operations and execution, right? Like first you return all the money to LPs, then you meet the pref requirements, and then you start splitting. A typical split is 80-20, where 20% goes to the GP for doing a great job. And that's called the promote.
Mm-hmm. Yeah, definitely. These are all really good things that investors need to think carefully about and review carefully, because obviously that's the whole end goal, is getting your money back out and hopefully with a return. So that needs to be the focus, like you said, even maybe before the property itself on, how to invest. And in general with investing, I think diversification is always something that comes up, diversifying your portfolio across maybe different asset classes, and then even within real estate, diversifying maybe different markets or asset types. So how do you think about diversification when it comes to these syndications? How do you approach it or advise LPs that you're speaking with?
In terms of diversification specifically?
Yes.
So I can only say so much because I'm not a, whatever it's called, financial planner. What I try to remind people to do is, the first step is how much of your total net worth should be allocated to illiquid anything. Forget what type of investment it is, but how much of it should be in liquid securities, period. How much of that should be allocated to a given strategy, such as real estate, or perhaps within that, like multifamily or industrial or whatever. And then within that, how much of that should be allocated to a given GP, right? I would also say, I think in my opinion, just on the most recent run up, I think a lot of people that shouldn't be LPs were LPs. This is just my opinion. And obviously many GPs disagree with it, but that's my opinion. And a lot of people that should be LPs, the ultra wealthy, so to speak, are not. And so I think it's interesting because now we're sort of seeing the people that, in my opinion, shouldn't have been investing. They're starting to call me and they're like, hey, I put the vast majority of my savings into this deal. And, I'm 70 years old and I don't know what to do. And like those conversations are heartbreaking because usually there's not much you can do. It's just like, it's too late in many cases. And so you just have to be super careful.
Yeah.
Yeah, I mean, it's obvious that, you have a lot of knowledge and resource in this sphere. So, for all of our listeners, can you share a particular experience that you've had that taught you a valuable lesson?
I think so. Broadly speaking, I'll just say that I've been involved with dozens, if not hundreds, of like deals that went bad at this point. And what I want to make like abundantly clear is that there's a very big difference between I'm an honest person and I just invested in something that's bad, and I really tried my best and it went bad. Like that happens. That's part of investing. And by the way, it's important for LPs to understand that some GPs really, really try and you still can't, get yourself out of a bad situation. So there's a big difference between that and a lot of the scenarios I see where something sketchy is being done, let's call it, right? So maybe something weird was done at the closing table. After the closing table, maybe there's like ulterior motives at play. And so I think the biggest lesson is, I've just been, surprised by the number of cases that I see that are like, again, somewhere between deceiving to breaking the law. I don't know how else to say it. And by law, I mean like securities laws and all that stuff. And just don't do it, guys. Like, I don't know what other message I can give. It's not worth it. It's just literally never worth it.
Yeah, we've seen that. We've come across that as well. And you're always like, it's only going to last so long, but yet people still try. So, but again, it's really important. We're advisors as well, with our clients in real estate, and you are too. And so we try our best collectively to help our clients and our, the people that we speak with to avoid those types of bad apples. But to your point, sometimes, like, no, not always are you going to hit a home run with investing. But again, it's about just avoiding the bad apples within those spheres. And to talk a little bit about, how real estate is constantly evolving and changing in the market and interest rates and all these different factors. So how do you kind of stay on top of all of these changes so that you're making better investments and also able to better advise the people that you're speaking with?
I mean, the best thing that I do and the best thing that LPs do, or should do, is stay on top of the market. Many LPs are like, well, I don't have anything liquid now, so therefore I shouldn't look at deals. And that's just like it's just not a good way of thinking about it. Now, again, as I said earlier, if you're super busy and you just don't have time to allocate to LP investments, so fine, like just don't do it. And I'm the first one to tell you that you shouldn't do it. But if you decided that this is something you want to pursue, then you have to take it seriously, even when you're not liquid, because you need to educate yourself on what's going on. And you can, zoom into a specific niche, a property type, a market, whatever it may be. But don't just, hibernate for 5 years and then wake up. Like you're going to just miss so much information.
And like you said, with the reps, even if you don't have the capital on hand, you can still be exercising that muscle of reviewing these decks, analyzing deals. And so, you're still practicing. So when you have the money, you're ready to make better investments, like you said, because the market is changing. So if you sit it out for 5 years or even 5 months, you can really miss out on, having your finger on the pulse of what's going on. So I completely agree. And we'll leave you with one last question, which is just really looking ahead. What are your goals with your platform that you created? And how do you see it evolving and hopefully, maybe even adding more value in the future?
The honest answer is I don't know. If you want a more professional answer, I hope it grows. Obviously, right now I'm at 1,700 LPs, which is like pretty cool, but it's also like a drop in the ocean of LPs in the US. I don't know of anyone else who's offering something similar. So it seems like I just need to continue to compound and get my name in front of people so that they are aware that I exist. And over time, I certainly think that there's a ton of added things that I could add that could help both sides of the platform in terms of the likelihood of your deal getting an investment, what are market terms. There's sort of like a lot of things, but I guess none of them in my head begin without having at least a decent hold on the marketplace And right now, like, I'm not there yet.
For sure. No, it takes time to build up market share. Real estate is a really big industry, and obviously really anyone can be an LP. So trying to find those people, obviously you have a big ocean out there to fish in. So what you're doing is amazing. And like you said, you're one of the only, if not the only person really trying to create this type of a platform. So there's such a need for this. We have such a shortage of housing in the US. And so we need to keep having GPs and builders and developers, out there building product, and they need money to do that. So, you're doing an incredible job, and we're so glad that you could come on today and share your insights with us.
Yeah, it was a pleasure. Thank you so much for having me.
Thank you so much for being here.
Hey, it's Stephen Bailey from Roadway Moving and Storage. As an official moving partner of Brown Harris Stevens, we know that your clients deserve more than just a move. At Roadway Moving and Storage, we turn moving into an experience they will love. From specialized services to a white glove treatment, we've got it all covered. When you choose Roadway, you're choosing a peace of mind for your clients. Plus, our referral program is the most rewarding in the industry. Want to learn more? Shoot me an email at steven@roadwaymoving.com or visit roadwaymoving.com.
Do you have a big move coming up? I'm Scott Nadler with Cross Country Mortgage, and I've got the loan to match your dream home. Whether it's your first or your fifth, I'll make the process quick and easy. Call me today. Let's make it happen.
Today's conversation with Aleksey was packed with valuable insights on navigating real estate syndications, the power of platforms like Centrio Capital, which democratize access to deals, and how his journey from Moscow to managing institutional capital shaped his mission to empower everyday investors.
Thank you for tuning in to today's episode with Aleksey. Be sure to subscribe for more inspiring stories and expert advice on real estate investing. And if you found today's episode helpful, leave us a review and share it with someone who's ready to start building wealth the smart way.
This podcast is for informational purposes only and does not constitute tax, legal, or investment advice.
For specific recommendations, please consult with your financial, legal, or tax professional.
Always leaves your text on red. Leaves your text on red.
Built the corporate group with $1,000 loan.
Tell us a little bit about how you actually came from.
Welcome to the build-up, John Rowan.
Thanks for having me.
We're coming to you here from Studio 1873.
It's not 57% over $2.7 million.
So then, cheers.